is Darren Joseph from HEJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of having a great conversation with Michael and Nuno. Michael, would you like to introduce yourself?
Thanks, Darren. Good to be here. After a career in consulting in the international tax planning game, I'm now the founder of an investment platform in Portugal with some interesting golden visa qualifying investment products.
Fantastic. And Nuno?
As Michael was saying, thank you very much for the invitation to be here. I'm a tax partner at CMS, which is a Portuguese-based law firm, but present in 45 countries. We have been, and I've been very active in the private clients sector, mostly obviously in respect of taxes, but also touching upon golden visa, and that's why I've been working actively also with Michael in this sector.
Fantastic. If it is that someone's intent is to hold it as an investment property, they're not going to live in it, it's an investment property, and therefore, let's say they go with a local company, because you get the additional deductions. What are the typical, you mentioned mortgage interest, but what are the other expenses that will be ordinarily deductible from the rental income?
If you mean if you use a company, right? So I'll answer in the two different ways. If you use a Portuguese company, you look at the corporate purpose of the company, and any cost which is includable within the corporate purpose of the company is typically deductible. We would be looking at, first of all, obviously the interest costs.
Yeah.
Another thing would be the depreciation costs. So
you get depreciation as well?
As a general rule in Portugal, properties, not land, but properties like built houses, have on average 50 years of useful life, which means that you can deduct 2% per year as a deductible cost, 2% of the acquisition cost.
Right. In the US, let's stick in with depreciation, because depreciation is a particularly powerful tool. Is there the concept of like cost segregation studies where you can look at the assets within a property as well?
Yes. So basically, you look at the acquisition price plus the costs which are capitalized into the acquisition cost, like, for example, construction, even the real estate transfer tax and the stamp duty that you pay up front is typically capitalized or accrued into the acquisition cost. And all this amount is then, obviously, the investment doesn't go straight into P&L, so it goes into the balance. And every year, 2% of that accrued cost is deducted as a cost. So it's for 50 years, 2% is deductible.
What about other assets, for example, like appliances? Can you depreciate that as well?
You can, but they don't have. So then we have a huge list of depreciation rates that depend on the nature of the asset. So there are some assets which are so attached to the property that they will follow the same useful life of the real estate asset. There are others, for example, a computer will be depreciated in 3 years. So 33% every year will go. It depends on the kind of assets. But obviously, the ones that are directly linked to the property are deductible. Interest costs,
advertising,
insurance, the accountant fee, lawyer's fee, even traveling expenses, because you can argue that you went to travel because you went to visit the potential client to your property, or you went to visit another property. It basically opens the angle for you to have other kinds of costs that would never be deductible if you would be an individual investor, or if you would be a non-Portuguese company owning a Portuguese property.
That is really good.
When that is the case, Darren, the expenses that are accepted as deductible are typically the condominium fees, conservation expenses, not like construction, but you need to fix something that was a floor or the window or something. And also the real estate tax that you pay, the one that I mentioned a few minutes ago, the 0.3 to 0.45%, they are also deductible against the rental income that you would have. Other expenses such as mortgage costs, furniture, equipment, depreciation costs would not be deductible if you are an individual or if you are a non-Portuguese company owning a real estate asset which is generating income.
What about if you have several properties and maybe you form a separate management company to manage them? Is that sort of structure permissible? Is that common?
That has been done a lot, mostly in secondary housing. We have a lot of clients that then have houses in the Algarve or in Comporta that they want to do short-term rental activity. In those cases, what we've seen happening a lot is they have acquired, namely for mortgage reasons or better conditions, they've acquired it individually, then they've incorporated the company, and they've basically either rented or lent the property to the company so that the company is the one that manages it. And there are
Right.
some incentives also in respect of VAT, because when you, in Portugal, VAT incurred by an individual is typically not deductible, whereas VAT incurred by a company that is, or by someone that is using a property for a vatable activity, the VAT incurred on the construction could be deductible even upfront. There are some tricks that we can potentially consider. And you are right, Aaron, that has been used as well, which is a kind of a split between the ownership and the management of the property being done, the ownership being owned individually and the management being done through a company. That has been also been the case quite often, mostly in secondary, like vacations house.
Fantastic. Thank you very much, guys.
Michael, if someone wanted to reach you to find out more about golden visa opportunities, what's the best way to find you?
Reach out directly. I've always experienced such a warm welcome in Portugal, and people looking at the jurisdiction, I'm happy to make sure they get the same level of experience. Email, it's available on my website, through LinkedIn. I'm generally very, very responsive. Looking forward to engaging with a few more people.
Michael Maxwell on LinkedIn. And what's your website? What's your URL again?
It's portugalpanorama.com. So email address is michael@portugalpanorama.com.
Fantastic. And Nuno, what's the best way to find you?
Look, I think that, again, the email is an option, which is nuno.santos@cmsportugal.com. I think it's probably the best way. And then, obviously, you engaging, we can talk via WhatsApp or phone. It's fine. All of them work.
Fantastic. Thank you very much. And we'll see you next time.